Wow, what a day on Dalal Street. Just a sea of red, right? A huge sell-off. But, underneath all that chaos, something really weird was going on. Something that honestly just doesn't make any sense. And it all comes down to one huge number.
So here it is, the big puzzle we need to solve today. Our own Indian funds, the DIIs, went on a shopping spree, pumping in over 5,000 crore rupees. Now think about that. With that much money flowing in, you'd think the market would soar, right? But nope, it crashed, over 300 points on the Nifty. So what in the world is actually going on here?
Okay, before we crack that case, let's just take a quick look at the damage report. And believe me, it wasn't pretty. It was a total bloodbath out there.
Just look at these closing levels. The Nifty 50, man, it just smashed through that key 25,200 level, ending down 1.25%. Bank Nifty go hammered too, down over 1%. And the Sensex, a massive drop of almost 1,000 points. This was just non-stop selling all day long.
So, what does that mean for you, for me, for every investor out there? Well, it means this: 5 lakh crore, just gone. That's how much investor wealth was wiped out in a single day. So the question is, how does a drop this big even happen?
All right, let's start digging. We need to figure out why this happened. And look, it wasn't just one thing. It was more like a perfect storm, right? 4 big negative factors all slammed into the market at the exact same time.
Culprit number 1, foreign money was running for the hills. The FIIs, the foreign institutional investors, they were just selling, selling, selling. They pulled out almost 3,500 crore rupees. Whenever global markets get shaky, this is what happens, and it's a massive drag on our market.
Reason number 2, we basically caught the flu from Wall Street. You know that big AI rally they were having in the US? Yeah, that hit a wall. People got nervous. Plus, some inflation numbers came in a little too hot for comfort, and that bad vibe just spread like wildfire, hitting us right when our markets opened.
Number 3, we've got some geopolitical drama. The whole US-Iran nuclear talk thing is dragging on with no clear end in sight. That kind of uncertainty makes the oil markets really nervous, and bam, crude oil prices shot up by 3%. And for India, since we import so much oil, that's just bad news. It means more inflation, more pressure on our economy.
And finally, number 4, the selling wasn't just in 1 or 2 places. It was everywhere. It was a complete rout. The auto sector, down almost 2%. FMCG stocks, hammered. Realty, down over 2.25%. This tells you it was widespread panic, not just a little problem in one specific area.
Okay, so you've got those 4 negative forces. Now, we get to the really interesting part. This is where we finally solve that big mystery from the beginning. Let's look at the tug-of-war between the smart money, the big fish.
And this chart just says it all, doesn't it? On one side, you have the FIIs selling off a massive 3,500 crores. But look at the other side. Our DIIs, our domestic funds, they stepped up big time, buying more than 5,000 crores worth. A classic tug-of-war.
But here's the bottom line. Even with that heroic buying from our DIIs, it just wasn't enough today. The weight of the FII selling, plus all that bad news from overseas, it just created this tidal wave of selling that nobody could stop. Plain and simple, the sellers won.
All right, so now we know why it happened. Let's switch gears and look at the charts to see what could happen next. Because believe me, the charts are sending a very, very clear warning.
So on both the Nifty and Bank Nifty charts, we have this big, ugly pattern. It's called a long bearish candle. Now, don't worry about the jargon. All it means is that from the moment the market opened to the moment it closed, the sellers were completely in charge. It's a textbook signal that the mood is really, really negative.
So for the Nifty 50, you need to tattoo 2 numbers in your brain for tomorrow. The first is 25,270. That's the resistance, the ceiling. If the market's going to recover, it has to get above that and stay there. But honestly, the more important number right now is the floor, 25,100. If we break below that support, look out. We could see another round of heavy selling.
Now let's talk Bank Nifty. It was a huge reason the market was down so much today. For the bulls, they've got to get back above 60,800. The key support to watch on the downside is 60,300. Seriously, keep an eye on Bank Nifty. How it moves tomorrow is going to be a massive tell for the whole market.
All right, let's do a quick scan of the market movers. Who managed to survive today's mess and who got hit the worst? Even on a day this red, you always find a few interesting spots.
Yeah, there really weren't many places to hide today. It's kind of interesting that the IT and media sectors actually finished slightly green. But that's about it for the good news. The loser list was long, with big sectors like auto and pharma just getting pounded.
And if we look at specific stocks, you can see that IT theme again. HCL Tech and Infosys were some of the top gainers, really holding their own. But on the flip side, you've got some big names on the losers list. Sun Pharma, Bharti Airtel, M&M, all of them were down more than 2.5%.
But you know, the real stock of the day, the one that just completely ignored the market crash, has to be Redington. This thing went on an absolute tear, rallying almost 15%. And why? Well, it's all about Apple. Redington is a big distributor for them, and news about potential new Apple products sent the stock flying. It's a perfect example of how a single stock story can completely overpower a bad market.
Okay, so that's the story of today. The big question now is, what about tomorrow? Let's put together a simple, clear game plan based on those key levels we talked about.
Look, it all boils down to this. If you're bullish, you need to see the Nifty break above 25,270 and hold that level. If it can do that, we could see a nice little recovery rally. But if the sellers are still in control and they push the Nifty below that critical 25,100 support level, then you better be ready for more selling.
And this really leaves us with the million-dollar question, doesn't it? Was today just a freakout? A one-day panic caused by a bunch of bad news that'll be ancient history by next week? Or is this the first shot in a bigger battle? The start of a real market correction? The answer is going to be in those levels we just talked about. So I want to know what you think. Was this a one-day thing, or are we headed for more pain? Drop your take in the comments below. And hey, if you got some value out of this breakdown, do me a favor and smash that like button. And definitely subscribe so you don't miss these daily updates. All right, that's it for me. Trade smart, stay safe, and I'll catch you tomorrow.